What's going on, traders? In this video, I'm going to show you exactly how I would start if I had to start all over again in trading. I'm going to show you how I would backtest, how I would actually forward test, how I would take a trading approach into the live markets all the way from backtesting to demo to first putting risk on the line. I'm going to show you how I would keep things extremely simple, how I would journal, and how I would understand that I'm going to have to apply some of my discretion and experience on the charts into my trading. When I first started out, I completely overcomplicated things and I spent literally years chasing these 100% objective, rules-based, mechanical, super complex strategies, thousands of indicators, maybe not thousands, but tons of indicators. We're not going to do any of that. We're going to start from scratch, and I'm going to show you how I would approach starting to build out a trading system, tracking results, and then when I would actually transition to putting some risk on the line. We're going to do this all in one shot because I'm going to do some back testing. If you need a whole bunch of fancy editing to stay entertained, this probably isn't going to be a good video for you, but I hope it provides some value. So we're going to hop right over here to TradingView. This is where I would start. And before we even do this, just going to show you guys, I trade live here on YouTube almost every dang day. What I'm going to show you in this video is not exactly how I trade. Again, it's kind of where I would start if I was starting from scratch. But if you want to watch me trade live every day, 100% free, I don't have a VIP or a course I try to sell you. I put videos out and trade live all damn day, sometimes 2 times a day now. I also run a 100% free Discord. More than happy to have you in here. We talk about trading, talk about different things. We're talking about like CBD last week. Oftentimes I write big monologues. We have people posting P&Ls, all that fun stuff. You keep up on my live schedule. We talk about news in the markets, all this fun stuff. More than happy to have you in there. I'll link it in the video, and links will be down below. But here's where I would start, right? I would pick one instrument, one trading instrument. Maybe you want to trade Forex, CFDs, stocks, whatever it is. Pick one thing, right? Before you're going to be able to get good at multiple things, you're probably going to have to get good at trading one specific market and one instrument, right? So for this example, we're going to be trading futures, and we're going to trade ES. And we're going to say we're going to trade ES intraday, and we're going to trade at the same time every day, right? I think that's probably also important. If you're swing trading, maybe a little bit different. But if you're trading, one instrument in the futures market, maybe you want to trade ES at 9:30, right? That's what we're going to do for this example. Where I would start is understanding that in random market conditions, with no erosion of edge by way of fees, commissions, spreads, if we were entering completely randomly, just flipping a coin to enter, we would end up break even, right? Now, we know this is, a little bit skewed because there are things that eat into our actual just being able to have a one-to-one and end up break even flipping a coin. But let's say for the basics that the market's fairly random on the short term, right? We know it's not, it trends over time. That's how we're going to utilize some of this. And let's say we entered with a one-to-one, we flipped a coin. In random market conditions, we'd end up right around break even. Less fees, commissions, right? Spreads, all these things that start to eat into it. So if we just start there and we say, well, if I use a one-to-one risk to reward, and I'm completely random, I'm just an idiot smashing my keyboard, buy or sell randomly, I'm around break even, okay? Most traders, when they start for a long period of time, are nowhere near break even. It's a straight shot into the ground. So to get closer to that break even starting point right off the bat, what I wish I did, again, that's the terms I'm going to speak in, is start with a one-to-one risk to reward, meaning I'm risking equal amounts to what I gain, right? So in the one that just popped up here, this is a 4.25 stop to a 4.25 target. So that's what we're going to start with. When we enter, in order to keep that consistent, we're not going to touch the trade. It's either going to go to a stop loss or a take profit. We are literally going to take ourselves out of the trade management equation. We're beginners. We can't handle all of the emotions that are going to come into play here. We can't really read market structure and price action, any tools we're using that good yet. So we're just going to enter with a one-to-one, let it go to stop loss or take profit, and then start to gather data from there. Along with that, I wouldn't use a ton of indicators. Now, you might have something that you've brought over from a past life, something that you've seen somebody else use. You want to use indicators? Fine. Whatever you want to use, go for it. But I wish I started with focusing on price action and market structure first to get a good feel for what that looks like, how price reacts around certain levels, what trends start to look like, right? before I started adding in different tools, which I do utilize myself. If you want to use something, fine. I would say condense it, keep it really stupidly simple. And then here's all we're going to do. Again, starting out as complete beginners. The goal here, we understand how we're going to structure our risk, one-to-one, okay? The goal here is going to be to try to enter when we think price is going to go up, long, and try to enter when we think price is going to go down, short, right? And when we think price is going to go down, how we're going to define that is a basic set of entry criteria. For this approach, right here, we are going to literally just say we're going to try to trade with the trend, okay? We need to define what a trend is. Here's the basics of what an uptrend looks like, okay? Price is making a series of higher highs and higher lows. This is extremely basic, but I think this is important because we got to say, if we're going to trade with the trend, what the hell's a trend, right? We're going to look at one time frame. For this example, let's say we'll use the 5-minute time frame, okay? We're going to scroll out. We're just going to stay on one time frame. And I'm going to throw trading view in replay mode. We're going to do this together. We're going to backtest. I'm going to show you how I would backtest, how I would track that, and then when I would probably start to take this to forward testing on demo first, how long we trade for, all that fun stuff. But here's what we're going to do. This is all we're going to do. We're going to scroll out on the 5-minute chart, really shrink out trading view, right? And on the higher time frame, viewing a number of days, if price is trending to the upside, we're going to wait for our trading time frame, which is right around 9:30. We're going to wait for that trend to continue, and we're going to enter with a one-to-one take profit and stop loss, right? And as we start, we're probably going to enter in dumb spots. We're not going to wait for pullbacks. We're not really going to understand, the nuances of how price action and market structure moves in the U.S. indices. But we're just going to start to track data, right? And then maybe over time we'll say, hey, maybe we want to enter on a pullback down when we're in an uptrend. Maybe we want to enter on a breakout, right? But for the beginning basics of this, we're going to try to get around break even. That's going to be the goal. We're going to try not to just consistently lose money because we know most traders are consistently losing money. And if we're just breaking even, we're way ahead of a massive percent. Now, for a downtrend, just to clarify what we mean when we're looking at a downtrend, the complete opposite, right? Price, when we scroll out on that 5-minute chart, is making a series of lower highs and lower lows. It's moving lower, right? The basics of what this should look like is when we scroll out, price is moving from the top left-hand screen to the bottom right-hand screen for a downtrend. Generally, for an uptrend, if we scroll out, price should be doing the exact opposite, right? It should be moving from the bottom left-hand side of our screen over here to the top right-hand side. Again, I'm making this extremely simple, right? We know overall, trading can be very simple. It doesn't mean it's easy, but in my humble opinion, and I'm an idiot from YouTube, so do your own research, make your own decisions, I believe trading can be very simple. In my experience, I spent years making it extremely complicated, researching all of these insane tools and indicators and fundamentals. And if I had just started where, closer to where I am now, which was what we're describing right here, I would have got to where I am now and probably even further a whole lot faster. So we're going to trade the 5-minute chart. This is the 1-minute chart. So we're going to trade the 5-minute chart. We're going to scroll out and we're going to try to trade with the trend during 9:30 a.m. for NYSE Open. We're going to enter with a one-to-one at an area that makes sense. We're going to use a fixed stop loss and take profit, meaning we're not going to touch the trade once it rolls out. Okay? And then we're going to collect that data. We're going to review. Once we start to have something that works, we're going to forward test it in demo. Okay? So let's go ahead and throw TradingView in bar replay mode. And this is exactly how I would do it. I'd come down here. And we can select a starting date, right? Like, let's say we want to start from, the beginning of the year, right? And we're going to trade this, day by day. We're not going to do the entire thing here, but I'm going to show you how I would backtest this. We're going to trade this day by day going forward all the way out, right? And I don't care about the results on this at all. I just want to show you how I would start, okay? If you backtested just doing this, hopefully you wouldn't be entering in such terrible places that you're consistently losing money with a one-to-one. Hopefully over a large enough sample size, you'd at very least be break even. And then maybe you'd be able to shift these scales in your favor and start to make money. So we're on the 5-minute chart. What do we say we're going to do? We're going to scroll out. If we scroll all the way out, let's just say without going all the way back in time, this is a little bit choppy, right? This is a little bit back and forth. We don't have a clean uptrend, right? We don't have price just continuing to make higher highs and higher lows. In fact, we are kind of all over the place, right? We got a little bit of consolidation up here, right? The more immediate time frame trend here is to the upside, okay? I would say that because we've got a little bit of what we're talking about here, right? Higher low, higher highs getting put in. We're coming above this area right here. We seem to be trending to the upside, at least for right here, for right now, right? So as we start to open up, in general, I think it's going to make sense to be looking for longs, right? As we zoom in, we are also pushing to the upside, right? So maybe for this example, you say, I'm really not that good at identifying trend, but I think it's an uptrend today. Great. You start to play trading view forward. And we're not even going to hit the buy and sell button for this. We're just going to use the position tool, and you'll see why, right? Okay, start to open up. Oh, price is looking pretty bullish. And this is as simple as this can be, guys, just to get started here, right? We're going to enter with a 1-to-1. And here's maybe how you enter, right? Maybe you enter as price is pushing up. Maybe you enter on a pull back down. Maybe you don't even know the difference yet, and you're just going to start to enter, right? What could make sense to do is to place a stop loss pretty far away where you don't think it's going to get hit, right? Maybe it's all the way down below these lows here. You don't think price is going to come back down here. And like we said, we're going to enter with a 1-to-1. So we're going to make sure that that number right in between, risk to reward ratio, is nice and even, okay? Here's what we're going to do. And again, we're not going to backtest this enough to actually be able to decide whether or not this is a viable strategy. But we're going to play the chart forward all the way. Okay, for this day, what result did you get? Nothing. You literally didn't even hit a stop loss or take profit. So maybe for this day, you make a note and you say, well, I went really wide on the 5-minute chart. That's a little bit too wide for this to play out, okay? We're gonna journal exactly what we did here, and then we're gonna make some review on it. How would I journal? Really quickly, right? Taking you all the way through, start to finish. How do we collect this data? Well, we entered with a fixed 1-to-1, doing exactly what we did. We have our take profit and stop loss on here. On TradingView, you got a really fun tool here. You can come over here and hit copy link right here. And what that does is actually copy this entire screen into a link. If you wanted to download the image, you could do that right here. You could download the image. And then what would I do with this? I would start you can use the notes section of your phone. You can use a fancy note-taking tool if you want, Notion, Evernote, whatever you want to use. I would take that screenshot every single day. Maybe it's multiple trades per day. We can, tighten up on the next one. And I would write a couple sentences. I identified the trend was long because I zoomed out and it looked like we were going to the upside. And you can see from the picture, it looked like it was going up. I entered today at 9:50 a.m. You can see the actual entry, the stop loss, the take profit using this tool. And price moved in my favor and then all the way back down. I think an improvement that I could have done here is tightening up. I think I was way too wide on this first day. And, here's why, because X, Y, Z. Very simple, very simple. If we continue to do that over a large sample size, right, we would start to find things that are not working so good, start to find things that are working better, and be able to adjust. And maybe for this part, since we're just keeping it 1-to-1, we're looking at how wide we're widening out that stop loss and take profit, and when we're actually entering, right? Because we're not touching trade management yet. For back testing, if you didn't want to do all that, you could literally just leave the position tool on, go from day to day if it doesn't get hit, and then just continue to play the chart forward, right? Maybe selecting the start of the next day, right? We were back testing here from January 6th of this year. We go over to the 7th, right? We're on to the next day, and we're going to do the same thing. Let's just play one more forward so we can make an example. Well, we still think we're kind of trending to the upside. We're still looking for a buy here. Maybe today, we're starting to watch this. Maybe we're a couple days in. We go, wow, wait a minute. We didn't enter long yet. We really started to sell off really aggressively. I think this is going to continue lower. I'm going to wait to see. Maybe we're pulling back a little bit. Let's see if we feel like this is going to continue lower. Again, we just are getting started. We're complete beginners, so maybe we're buying and selling breakouts. We don't have stop losses in good places, but we made a note from yesterday that says, well, we went way too wide. So, maybe we're not going to go all the way out here, But we're going to try to start to apply some consistency. You have to be able to have some consistency. We're entering with a 1-to-1. We're putting a stop loss above or below or lower or high. We're entering with the trend, maybe on that day. And on today, we note maybe like if we really zoom out on the 5-minute, a little bit choppy. We kind of were pushing to the upside, but now we're starting to make these higher, lower highs and lower lows. We're identifying this as a downtrend, right? Again, we're just collecting data and experience on the charts. Maybe we get stopped out. We don't. We take a take profit, right? Right here. Beautiful. Okay? So again, we screenshot this one. We make a note. I sold as price was coming lower. Maybe what could I have done better? Well, I noticed that when price moves lower really aggressively, oftentimes it pulls back. Maybe there's a way that I could have entered here, over here. Couple notes, couple sentences. And you watch this stuff play out over and over and over again. And you suck at the beginning. You're not good. You don't understand. You keep getting swept out. You get stop losses hit often. But again, you're starting with a 1-to-1. And a monkey on the keyboard should be near break even. Again, not 100% random market conditions. We have things that erode what our actual P&L is, which is spreads, commissions, fees, right? If you're in another market, like I talked about, maybe you have swaps, you have a whole bunch of other things that will eat into it, right? That you have to beat on the front end. But if you start from that mindset, that basic where most traders just come in, they're doing crazy stuff, and their P&L's a straight shot down. And you go, man, if I was just flipping a coin with a 1-to-1, I'd be probably closer to not losing this money so quickly and just blowing accounts. Start there, then try to inch your way forward. That's what I would have liked to have done. So again, we screenshot, we keep going. Let's say we backtest this across a number of months. We do this for a long period of time, right? A number of months worth of data. And we start to get something where we say, okay, Monday morning's coming up. I want to demo trade this, right? We're going to do the same thing that we were doing in backtesting. We're going to try to apply that consistency, structure our trades the same way. And just like we are in replay mode here, we're going to collect that data. Now we're forward testing on demo, right? Let's say you forward test on demo. How long would I forward test on demo for, right? If I was starting from complete scratch before I put any money on the line. A long period of time, a nice long period of time. Let's say you got at least 3 to 6 months demo trading. Right? Again, this is different for everybody. I'm not a financial advisor. I don't get to say, a good recommendation of when anybody should move from demo trading to put money on the line. These are things are 100% up to you, right? But I'd say if you don't have 3 to 6 months of solid, starting from complete scratch, of solid data supporting that you'll probably be able to make some money when you put risk on the line and it gets harder, you don't stand a chance. If you back tested and forward tested for a week, just stay where you're at. Past that, what would I do, right? We've been collecting data. You've been screenshotting your charts over here. You have a nice note. You've refined exactly when you want to enter. You've refined where your stop and take profit want to go. What would be the next step for me? I don't know anybody, and here's why and what I would do. I would look to put the least amount of money on the line. I would look to put in completely insignificant amount of money on the line. Maybe that's with a prop firm in the smallest, cheapest challenge account. Top One Futures, for example, who I'm partnered and affiliated with. You can check them out if you want. I'll link it right here. Code RDF gets you the best deal. They have a 25K Elite Challenge account. You get into that account, you're looking at $30, I think, for a month. Why would I start there? Why would I start with an insignificant amount and a tiny account and all this stuff? Because you're probably going to lose money. All of a sudden, when you come from backtesting to demo to live market conditions, all of a sudden something happens. This light switch flips in your mind where trading gets a whole lot more difficult. And instead of, you enter the trade here, instead of holding on to this trade, you do something you've never done before. Price starts to come down right here. You see real money flash down the line. You know you have a chance to pass this challenge account maybe or make money in a funded account. And you close the trade out right here. And you pat yourself on the back. And you go, yay, I did good. I made money on my first day. Then the next day comes, or later that day, you look for another trade, and you enter here again, right? And maybe we'll lose this one. It'd be nice if I could demonstrate this, because I'd like to see a loss. Maybe you enter this trade, and price started moving against you, but you didn't do what you did over here. You didn't close out early. You let that thing come all the way back on you, right? And all of a sudden, you take a full loss. And you go, wait a minute. Over here, I made money, And then over here, I lost money, and I did something completely different that I shouldn't have done. I touched my trade over here. I cut my winner early, and then I let my loss run all the way to the stop loss, right? Where maybe if I had taken both of these trades, I'd be break even today if I hadn't had an execution error. You'll start to identify all of these different things that come into play: emotions, mindset, right? Maybe instead of entering where you're supposed to enter, you waited way too long. You enter in a terrible spot. You have a way too wide stop loss and take profit. And now we have a whole nother challenge, which is the more difficult part of trading, right? Because I really think you can create something repeatable and consistent and simple when it comes to structuring risk and creating a way that you want to enter the market when you think it's going to go up or think it's going to go down, in the most simple terms. But when money's on the line, all of a sudden things start to change. So, what would I do? I would stay on that least amount of money, right? Until I started to gain some consistency. And then from there, I would start to scale. Now, maybe this is a live account with an extremely small amount of money that's insignificant, never more than you want to lose. But that's what I would do. And all the while, as I'm taking wins and losses, right, I'm journaling these trades, because now we are into forward testing with money on the line. I'm journaling these trades, and maybe here I take the note, right? I take the screenshot, and what does my note for the day say? I executed poorly. All of a sudden, I didn't hold my trade. I had an execution error. I make notes now. I start to learn and kind of understand what I want to do. So, the point of this, guys, is to show you a couple things. Not to give you a strategy or a crazy approach, but to explain what I would do starting from scratch. And you'll notice something here. This is not 100% mechanical. This is not even close to being 100% objective and mechanical that you can code into a bot or EA. This is discretionary, and it's using a lot of intuition and discretion and subjective interpretation of price action to say, well, what is a downtrend? What is an uptrend, right? I think it's important to recognize that you're going to have to apply some of that. I don't know any manual traders that do well with a strategy that could be coded into a bot or an EA. If it was just that simple, we would all have that, and we would just go kick back on the beach, hanging out, raking in millions of dollars, right? I haven't seen that out there in a way that is easily accessible for $50, where someone's selling you a system and you just code it and you go and kick back and it makes money for you. So you're gonna have to apply your discretion, your intuition, right? You have to have something that's somewhat consistent, somewhat repeatable, right? What is a trend? What does a trend look like? You should write some of this stuff out. When are you going to enter? When exactly are you going to pull the trigger every day? As you start to test and just play around and get a feel for what these things are and what your style is going to be. Is it on a pullback? Is it on the close of a 5-minute candle on the way down? Is it on the break of a prior low? You can start to get clearer with this stuff. Where does your take profit and stop loss go? Are you not touching it at all, which I think would be helpful for beginners in the beginning? And then just start. Start to see if you can get some consistency. Start to see in back testing, when it's on complete easy mode, can you start to make money? Then forward trade that. Test that in live market conditions on demo where there's no money on the line. Can you start to gain some consistency there? Are you doing something day in and day out that looks like over a large period of time, a decent sample size, at least to start, that you would make money? Great. Cool. You want to put some money on the line? You're going to lose money first. Have at it. Now, all of a sudden, what happens? That next challenge, right? That's the process I would go. Key points here, guys. Really key points. I would not put a lot of money on. I would keep it on demo first and backtesting first. And I would put the absolute minimum amount of money on the line, because you do have to move off of backtesting and forward testing, once you have some data. I would put the minimum amount of money on the line to get started, right? And maybe you say, Zach, this is all great. I want to backtest just for a very small amount of time and forward test just for a very small amount of time and move off of backtesting quickly. That's cool. I think you should gain some experience before you put any money on the line, because you're going to suck whether you have money on the line or not money on the line first. But yes, the real challenge comes in once you have money on the line. So there is a very solid argument to be made that says you shouldn't backtest and trade on demo for very long at all. You should get money on the line. Everybody's in a different spot, and financially, and that makes sense. But whatever you do, make it insignificant, right? Once you start to gain some consistency, then scale from there. Almost everybody goes the other way first. Very short amount of time, if any, backtesting or trading on demo. Immediately way too much money on the line, way more than they would like to lose, and they start to set themselves back, and they never really are able to focus on the trading itself. collecting the data and actually creating something that's somewhat sustainable. These are the steps that I would take. I would keep it extremely simple, super simple. More indicators, more complexity, more creating insane narratives around the markets and what's going on is not going to help you. It's not going to save you. I'm sorry to tell you, it's not going to help you. Use the tools that you want. You want to use order flow, you want to use bookmap right off the bat, you want to use different volume profiles. All of these things can be very helpful. That's great. I think as a beginner, you got to narrow your focus and actually get good at one thing before you start branching out. Keep it somewhat simple. You use whatever tools you want. Make it repeatable. Make it repeatable when it comes to risk management and trade management, especially, as well as when you're entering and exiting. You have to do something consistent in these very random on the short term, consistent on the long term markets. Track your data and very simply take the hard look and say, what's working well, what's not working well? How can I do a little bit more of what's working well, a little bit less of what's not? Every single day, you got to track it just a little bit. I went over the most basic, simple way. Screenshot of the chart with the position tool, couple sentences. What the heck happened? Why did you do what you do? How did it work out? Was this part of your approach? Was it in line? Did you execute effectively? Great. Yes, it worked out. It didn't work out. Any room for improvement? Awesome. If you continue to go down that path, you'll gain more experience in the markets, right? You'll get better at reading and interpreting whatever tools you want to utilize, right? You will gain more experience. It's just how this works in any profession or sport or activity, right? You get better over time. You gain consistency and you start to find your personality and your style in trading, right? Maybe you are a very, contrarian view of the markets. You start to work that in, right? You identify things that you want to do more of that are working well and what you want to do less of. You find your strong and your weak points. You start to understand the role of psychology and mindset and how it can really impact you once you start to have money on the line and you start to face those demons and go through. But starting from scratch, that's what I wish I did. One-to-one, simple, identifying the most basic stuff on price action and market structure without overlaying my chart with 1,000 indicators and tools and oscillators that I stood no chance of actually being able to get good at or get some experience on, confusing the heck out of myself, never being able to have a clear entry style or approach to the markets, insane with trade management, dragging stops to break even, scaling in and out, moving take profits, doing something different every single day, never being able to gain consistency. Trying to make things 100% objective that I could code into a bot or a strategy, very, very difficult to do. Keep it simple, keep risk consistent, keep your trade management consistent, your whole approach consistent, track your data. You're going to lose up front, right? But start from around that break-even point if you can, right? That thought process, and try to improve from there. I'm not saying that you have to stay at one-to-one for forever. I'm not saying that you can't manage your trades, stop loss to break even, all of these different types of things. But I think a really clear, easy, simple starting point to keep you off of the straight shot down for years can be what we described in this video. If you guys have questions, feel free to comment down below. You want to watch me trade live, a very simple approach almost every dang day, 100% free. I do that here on YouTube and Kick, 9:30 a.m. Eastern, and sometimes for Power Hour, 3 p.m. Eastern. I also run a 100% free trading Discord like I talked about. We'd be more than happy to have you in there, hanging out, talking about the markets, talking about all of our journeys on this thing we call trading. Real quick, guys, important for me to note, I am not a financial advisor. I don't provide financial advice. Nothing I say or do here or anywhere else is a suggestion or recommendation to do anything. Trading's risky. Most traders lose money. If you're watching this as a beginner, I am sorry to tell you, you are likely going to lose money for forever. You're likely never going to make any money, but you're definitely going to lose money for a considerable amount of time. This might not be the path for you. Everything I say and do here is for entertainment purposes only. I'm just an idiot yapping on YouTube for fun. Do your own research, make your own decisions. Read CFTC Rule 4.41 on simulated trading, which is what you see out of me, even in funded platform accounts, and the affiliate and partnership disclaimer that I was talking about earlier. I'm partnered with Top 1 Futures, Bookmap, and others. I stand to make money from links and codes. I can't be unbiased if I stand to make money. Hope this video helped you guys. Talk to you soon. Hope to see you trading live.